How's it going, traders? It's Pulp of Wall Street back with another weekend review. Today we're going to look at my top tech charts going into next week. Make sure to like and subscribe to this channel so you can get these actionable charts as soon as they come out. And if you can, leave a comment down below. Let me know what you think about these chart videos. Also, feel free to watch this on 1.5 speed if you feel like I'm talking too slow. And as always, keep in mind, I'm not a financial advisor. This is not financial advice. I'm only doing this for educational purposes only. So let's dig into the charts. So as always, I'm using TrendSpider, and today we're going to just look at the weekly chart. I think with the overall market conditions right now, it helps to zoom out a bit. And keep in mind, we have PPI on Tuesday, we have FOMC on Friday, and we have FOMC on Wednesday and quad witching on Friday. So it's going to be a volatile week, and that's why I kind of want to zoom out. It's just going to have a lot of intraday volatility, and I just want to see from a bigger standpoint where we're going to be going. So taking a look at our first name, Apple. So 150 was a really tough level, as I've been mentioning, for 4 weeks. Couldn't break through. We had one or two false breakouts, quick reversals to the downside. Now we watch 133. If we fail at 133, then 120 would be my next level to the downside. You can see the 21 EMA is crossing under the 50 SMA here. We've already lost that channel, as we've been talking about. And we've have 5 weeks fired down from at TTM squeeze fire. So no surprises here on Apple. Let's take a look at our next name, AMD. And with AMD, you could see we came into the top of the channel here, and we just failed. I mean, it was pretty simple. We also came into that 50 simple moving average. Well, we didn't really come too close to it. We came into the 21 EMA. Last week, we wicked into it, and this past week, bearish engulfing candle. This is a very bearish candle here. So it looks like we'll probably test this COVID low anchored VWAP here, and if we lose that, watch that center channel test, possibly 83 in the next 2 weeks. All right, next up is Amazon. So, we watched this post-split. It was hovering around 125 for a couple of days, and then ultimately just failed at that 200 simple moving average. We lost that 125 level. We came down. We lost 112. It looks like $100 is going to probably come next. Again, could happen in the next 2 weeks. And then ultimately, I'm watching this demand zone down here. If you jump over to the daily chart, you'll see this demand zone right between $86 and $91. So that would be my next target to the downside if we lose 100. Next up is CrowdStrike. CrowdStrike actually held up pretty decently. We did fail at 2 weeks ago. We failed at the COVID low anchored VWAP, and this week we also failed at the COVID low anchored VWAP. However, we've kind of closed green, right? So, we're also closed over that 50% retrace at 165.12. So let's watch CrowdStrike this week. Let's see if we continue to show relative strength in a weak market. Next up is Datadog. So after a really strong week 2 weeks ago, came right up to that 50% retrace at 114. We failed there, and then put an inside weekend this week. So watch to see if we could hold 93.78. If we can't, then 91 and 83 to the downside in the next couple of weeks. Google. I know we have our split coming up. Bearish engulfing candle this week. We failed at the 382 retracement at 22.57. Looks likely we'll test these lows at around 2037. And then underneath that, 2019 is our 50% retrace. We have a gap right below that. So not all gaps need to be filled, but this one, if we continue to show weakness, will likely get filled. Next up is Goldman Sachs. We were watching financials 2 weeks ago. Looked like they wanted to move higher, and then ultimately we just got rejected at 330 on Goldman Sachs. So big move to the downside. This is already breaking down, watching for a pullback to 277 next, and then potentially to this 200 simple moving average at 262. HD, another chart that we were watching, looking like it wanted to move. Well, it did want to move. It wanted to move to the downside. So what I'd be watching here, let's just draw out some fib levels. What I'd be watching is potentially a move back to 284. And if we lose 284, then the 200 simple moving average here, which right now it's right at about 261. And then under 261, 247 to the downside. Here's Microsoft. Looking like we're coming down to the bottom of this channel, which should coincide with these previous lows at 246. So 250 is coming, right? That's going to be a nice round number. So 250, 246, and then possibly the bottom of this trend line. Could be an area where we see a bounce. If you zoom out, trend line bounce here, trend line bounce here. This was the original start of the trend line. So that's what I'm watching for here on Microsoft. If that does not hold, then likely a bigger move to the 200 simple moving to the moving average to the downside right now at around 215. Next up is Nvidia. I had this cluster of a level. Again, oops, don't want to do that. Let me get that properly situated. Perfect. Okay, so wanted to zoom out, right? You could see the trend line, right? Very similar to Microsoft. We're coming back into that trend line here with a cluster of Fibonacci levels. So watch between 159 and 165. This would be an area I would watch for a bounce. If we lose 155, then I think we'll see a bigger move down to possibly the 200 simple moving average. Here's Shop. Failed at that 786 retrace at 382. It was looking like it wanted to test 400. It did, and it failed. We do have some bullish divergence that's showing up here on the weekly chart. So I'm going to keep a close eye on this, but it's likely that we're going to start to see a bigger move to the downside if we lose 300. Watch 300 on Shop. We lose 300. I think we could see a bigger move down to this 200 to 177 level. That would be my next demand zone down here. And last but not least is Tesla. I've been talking about Tesla for a while now, and you could see 700 has been the level to watch. We closed underneath 700, but then Tesla on Friday announced a potential 3-to-1 stock split. So they're going to try and get that approved. So we saw a bounce post-market, aftermarket on Friday with Tesla. So we're back over 700. We're back over 700. We're at 709. Again, I'm watching a breakdown of 700 next week. We should see 650, potentially 623. If we lose 623, I'm watching this target zone. Somewhere between 500, 550 would be my target to the downside initially. And if we lose that level, then, potentially 400 on a test on that 200 simple moving average. So those are the tech stocks that I've been watching and I continue to watch week in, week out for day trade opportunities. It's seeming like the plays are going to be to the downside on tech this week. Just watch the levels that I mentioned. And we'll see where this week leads us. As I mentioned at the top of the video, we have a lot of economic data points this week. I think that's going to cause a lot of volatility. And then we have the quad witching on Friday. So I think this week is going to be a very difficult week to trade. So just remain patient and let's see where this bear market leads us next. Take care, everyone. See you in the markets tomorrow.